All right. Let's dive into Shakti Pumps.
Yeah.
Specifically, their 2023-24 annual report.
Okay.
So if you're looking for like the inside scoop on their business financials, the people behind it all, this is where you want to be.
This report is really something.
Yeah.
Yeah, it's really comprehensive.
Oh, good.
We're going to be able to pull out some interesting insights about how they work, their position in the industry and their plans for the future.
Great.
Yeah.
Let's start with the industry overview.
Okay.
Kind of set the stage.
Yeah.
What's going on with pumps in India?
So the report paints a pretty optimistic picture, actually.
Okay.
The pump industry, especially when it comes to solar-powered pumps, really ripe for growth in India.
Interesting, because I know solar energy in general is kind of having a moment.
Absolutely.
But what is it specifically about solar pumps that makes them such a promising market?
Well, the report highlights that the Indian government is really pushing for solar energy adoption in agriculture. And there's this program called the PMKUSU scheme, which is basically this huge initiative to install millions of solar-powered pumps across the country. So it's a huge boost for both the farmers and companies like Shakti Pumps.
Okay, so there's a big push for solar pumps.
Yeah.
Shakti Pumps is there to meet the demand.
Right.
But what about the competition? Are they the only ones trying to get a piece of this solar-powered pie?
Oh, definitely not.
Okay.
The report mentions some pretty big names. Like CRI Pumps, Luby Pumps, Kirloskar Brothers Limited. These are all well-established companies.
Got it.
With a long history in the Indian pump industry.
It's a competitive market.
Yes.
How does Shakti Pumps stand out? What's their differentiator?
Their diverse product portfolio is a big advantage. They're not just making pumps. They also manufacture motors, inverters, and even the structures you need for the solar installations.
So they've got kind of a whole ecosystem.
Exactly, a whole ecosystem. It's all integrated.
And they have that subsidiary, right?
Yeah.
Shakti EV Mobility Private Limited. That's working on electric vehicle components.
That's right. So they're diversifying, tapping into these trends. Like electric vehicles and renewable energy.
And that Make in India commitment.
Yeah, that's big.
That probably helps too.
Oh, absolutely. That resonates with the government's push for domestic manufacturing.
So smart strategy.
It is.
Okay, diversification, Make in India.
Yep.
But, 25% market share.
Yeah, that's huge.
Under the PMKUSM scheme.
Right.
That's got to be a big advantage.
Oh, absolutely.
I mean,
that program is driving a huge chunk of their business. And securing a quarter of the market share is really significant.
All right, so they've got a solid market position.
Yeah.
A diverse product range, but every business has risks.
Right. Right.
What does the report say about that?
Well, they are definitely upfront about the challenges. Things like environmental concerns, supply chain sustainability, water scarcity, it's all there.
Water scarcity?
Yeah.
But they make pumps.
Right.
That seems a bit
I know.
counterintuitive.
Well, they acknowledge that in the report. They're aware of that delicate balance between providing irrigation solutions and promoting responsible water use.
So they're trying to address that.
They are, yes.
So they're not shying away from these topics.
No, they're not.
But what are they doing to actually mitigate the risks?
Well, they're taking a multifaceted approach. For example, they're investing in energy-efficient manufacturing. They're using renewable energy sources, and they're encouraging their customers to adopt water-efficient farming techniques.
So a combination of internal changes and external partnerships.
Exactly.
Okay, so they're facing those challenges head on.
They are.
Now, let's get to the heart of any business.
Right.
The money.
The financials, yeah.
Yeah, the financials.
Let's start by taking a look at their profit and loss statement.
Okay, break it down for us.
All right.
What are the key highlights?
So one of the most impressive figures is their revenue growth. They saw a 41.7% increase.
Wow, that's huge.
Year over year.
What's fueling that kind of growth? Is it just this?
It's definitely a big contributor.
PMQs and scheme.
But not the only one. Expanding their market reach.
Yeah.
Launching new products.
Makes sense.
Those are also playing a big role.
So it's a combination of factors working in their favor.
It is.
What about profitability?
Okay.
Are they actually making money?
Oh, absolutely.
Okay.
Their profitability metrics are incredibly strong.
Good.
Their EBITDA.
EBITDA.
Yeah. Earnings before interest, taxes, depreciation, and amortization.
Okay.
Saw a 237.8% growth year over year.
So for those of us who aren't financial wizards,
right.
What is EBITDA?
So think of EBITDA as a measure of the company's operating profitability.
Okay.
It basically strips away things like interest, taxes, depreciation, to give you a clearer picture of how efficiently they're running their core business operations.
Okay, that makes sense.
Yeah.
So big jump in EBITDA means they're getting a lot more efficient at what they do.
Exactly.
What about their actual profit?
Okay.
The bottom line.
So their profit before tax, PBT, grew 488.8%.
Wow.
And their profit after tax, PAT, which is that ultimate measure of profitability, shot up 487.2%.
Those are some impressive numbers.
They are.
It sounds like they're not just growing.
Right.
They're doing it in a really profitable way.
Yeah, and their PAT margins have also improved significantly.
Okay.
Showing that they're really focusing on those high-margin products and managing costs effectively.
Okay, so their income statement is looking pretty healthy.
It is.
What about the balance sheet?
All right, so their balance sheet also reflects a strong financial position.
Okay.
So their assets have grown significantly, but they're also managing their liabilities well.
So they're not just accumulating assets. They're being smart about their debts.
Exactly.
What about cash flow?
Okay, so their cash flow statement shows a very positive trend.
Okay.
Their operating cash flow, which basically measures the cash generated from their core business operations, is strong.
Okay.
And it's growing steadily.
So they're making money and they're managing it well.
Yes.
But who are the masterminds behind all of this?
That's where the report gets into the promoters and management team.
Okay, let's meet the people behind the pumps.
So the company was established back in 1982 by the Patidar family.
Okay.
And they continue to be kind of the driving force behind its success.
It's always fascinating to see how these companies are built by families.
Yeah.
But a company isn't just about its founders.
Right.
What about other stakeholders?
Absolutely. And the report sheds light on the various stakeholders who hold a piece of the pie. So you've got institutional investors.
Okay.
The public transparency is key. So they lay it all out there.
Knowing who owns what can really tell you a lot about a company.
Absolutely.
And their decisions and where they're headed.
Yeah.
But speaking of transparency, what about related party transactions?
Okay. So
those can sometimes be a red flag.
Yeah, it is important to understand those relationships. So the report is very detailed about any transactions Shakti Pumps has had with entities related to its promoters or management team.
So everything is above board.
Above board, ensuring everything is transparent.
Okay, so they're being open about those potential conflicts of interest.
They are.
Let's get back to the bigger picture for a moment.
Right.
What are some of the major risks and challenges that Shakti Pumps is facing?
Okay.
We've touched on a few, but let's really delve into them.
So one of the key risks they highlight is this ever-changing regulatory landscape.
Okay.
So government policies, regulations, particularly in the renewable energy sector, can shift, and that can impact their business.
Makes sense. What else are they concerned about?
They're also acutely aware of potential supply chain disruptions.
Okay.
Remember, their operations are global.
Right.
So any hiccups in their supply chain could really affect production and profitability.
I imagine those kinds of disruptions are a concern for a lot of businesses these days.
Yeah.
What are they doing to prepare for that?
So they're actively working to diversify their supplier base.
Okay.
And they're strengthening relationships with key suppliers.
So it's all about building resilience.
Yes. Yeah.
Having backup options.
Yeah.
Smart.
It is.
Anything else keeping them up at night?
Well, they also acknowledge the competitive nature of the market.
Okay.
So new players could emerge.
Yeah.
Technological advancements could disrupt the industry.
Right.
It's a dynamic environment.
Very dynamic space.
Yeah.
So they need to stay agile.
Absolutely.
They're not resting on their laurels.
Nope.
So they're staying vigilant.
Yes.
And proactive.
That's right.
But how are they actually doing financially?
Okay.
We've talked about growth and profitability.
Yeah.
But Let's actually look at their financial statements in more detail.
All right, so their financials definitely warrant a closer look. Let's start with their profit and loss account.
Okay.
Which gives us a detailed breakdown of their revenues, expenses, and profits.
All right. What are the most important figures to focus on?
Well, their revenue from operations has grown quite impressively.
Okay.
From $9,677 million in fiscal year 2023 to $13,707 million in fiscal year 2024.
That's a huge jump.
Yeah.
So their revenue is definitely heading in the right direction.
It is. What about their profit?
Okay, so their gross profit has also seen a substantial increase.
Okay.
More than doubling from $2,767 million.
Okay.
In fiscal year 2023 to $5,989 million in fiscal year 2024.
So they're not just selling more. They're making more profit from each sale.
Exactly, which indicates they're effectively managing their cost of goods sold while also increasing sales volume.
It's a fantastic sign.
It is.
What of their overall profitability?
All right, so their EBITDA has experienced phenomenal growth, rising from $666 million in fiscal year 2023
to $2,248 million in fiscal year 2024.
So they're getting really good at running their business efficiently.
Yes. This really highlights their improved operational efficiency.
Okay, what about their bottom line?
Okay, so their profit before tax has also skyrocketed, going from $322 million in fiscal year 2023 to a staggering $1,899 million in fiscal year 2024.
Okay.
This impressive increase is a direct result of their increased revenue and their ability to control expenses.
And finally, let's talk about their profit after tax.
Okay.
The ultimate measure of a company's earnings.
So their profit after tax has grown tremendously from $241 million in fiscal year 2023 to $1,417 million in fiscal year 2024. These figures paint a very positive picture of their overall financial performance.
It sounds like Shakti Pumps is firing on all cylinders.
They are a company on the rise.
This has been a great overview of Shakti Pumps so far. What's next on our deep dive agenda?
Let's take a closer look at their balance sheet.
Okay.
This will give us a better understanding of their assets, liabilities, and overall financial health.
Sounds good to me. Let's dive in.
All right. So one of the first things you notice is this impressive growth in their total assets.
Okay.
They've jumped from $9,336 million in fiscal year 2023 to $14,503 million in fiscal year 2024.
That's a pretty big increase.
Yeah.
What's driving that growth?
Well, a big chunk of it is coming from their current assets, particularly their inventories and trade receivables. And this makes sense considering their sales volume's gone up and they're expanding into new markets.
Okay, so more sales and a wider reach are leading to more assets.
Exactly.
But what about the other side of the equation? Their liabilities.
So their total liabilities have also increased from $5,581 million in fiscal year 2023 to $8,400 million in fiscal year 2024.
Okay.
However, it's important to note that this increase is primarily due to a rise in their current liabilities.
Okay.
Things like trade payables and other short-term obligations.
So their short-term debts have gone up.
Yeah.
Is that necessarily a bad thing?
Not necessarily. It often reflects a growing business. What's really interesting is that their long-term borrowings have actually decreased.
That's a good sign.
That is a good sign.
Less reliance on long-term debt.
Exactly. It suggests they're generating enough cash from their operations to fund their growth without having to borrow heavily.
All right, so they're managing their debt strategically.
Yeah.
What about shareholder equity?
Okay.
Where does that fit into the picture?
Their shareholder equity has seen a significant boost, rising from $3,755 million in fiscal year 2023 to $6,103 million in fiscal year 2024.
So their ownership stake in the company is growing.
It is.
Why is that?
So this increase is a direct result of their strong earnings performance and their decision to retain profits. So instead of paying out everything to shareholders, they're reinvesting a portion of those profits back into the business to fuel future growth.
That sounds like a pretty solid long-term strategy.
It is. It definitely suggests they're confident in their ability to generate returns on those reinvested profits. Overall, their balance sheet presents a picture of a financially healthy company that's growing its assets while keeping its liabilities in check.
So they're in a
Yeah, they're in a good position to capitalize on future opportunities.
Right. Yeah. Balance sheet check.
Check.
Now let's move on to another important financial statement.
Okay.
The cash flow statement.
Right, the cash flow statement.
This one gives us insights into how the company is generating and using cash.
It's all about the movement of money.
Cash flow is king, as they say.
It is.
So what does Shakti Pumps cash flow statement reveal?
So it shows a company that's generating strong cash flow from its operations and investing wisely in its future growth.
Okay.
So their cash flow from operating activities has increased from $3,203 million in fiscal year 2023 to $2,464 million in fiscal year 2024.
So even though that number has decreased, it's still a positive figure.
It is a positive figure, absolutely.
Okay.
This means they're effectively converting their profits into actual cash, which is essential for maintaining a healthy financial position and funding growth initiatives.
Now, what about cash flow from investing activities?
Okay.
What does that tell us?
So their cash flow from investing activities has been negative.
Okay.
And that's not necessarily a bad thing.
Okay.
This reflects their investments in things like property, plant, and equipment, as well as intangible assets like patents and technology.
So they're pouring money back into the business.
They are.
To expand and innovate.
Exactly. They're thinking long term.
Smart.
And finally, we have cash flow from financing activities, which covers things like issuing debt, or equity, paying dividends, and repurchasing shares.
What's the story there?
So their cash flow from financing activities has been positive, mainly due to an increase in borrowings. However, their overall cash and cash equivalents have increased, which is a very positive sign.
So even though they've taken on some additional debt, they still have more cash on hand than they did before.
Exactly. It indicates that they're generating more cash than they're using, even with their investments and financing activities.
Okay.
It's a strong indicator of their financial health and ability to manage cash effectively.
All right. So we've covered their income statement, balance sheet, and cash flow statement. What's next on our financial journey?
Now, let's delve into some key financial ratios.
Okay.
These ratios can provide valuable insights into a company's financial health, profitability, efficiency, and liquidity.
Ratios can be a bit daunting for those of us who aren't finance experts.
Right.
Can you break down some of the key ratios we should be paying attention to?
Of course.
And what they tell us about Shakti Pumps?
Let's start with the profitability ratios.
Okay.
These ratios measure a company's ability to generate profits from its operations.
Okay.
One key profitability ratio is the gross profit margin, which tells us how much profit a company makes for every dollar of sales.
Okay.
After deducting the cost of goods sold.
Got it.
Shakti Pumps has a gross profit margin of 43.7%, which indicates that they are effectively managing their costs.
Okay, that's good to hear.
And generating a healthy profit on their sales.
What other profitability ratios could we be looking at?
Another important one is the net profit margin, which measures the company's overall profitability after accounting for all expenses, including taxes and interest.
So the bottom line.
Yeah, the bottom line.
Essentially.
Shakti Pumps has a net profit margin of 10.3%, which is a healthy figure and suggests that they are running a profitable business.
So they're making money.
Yeah.
But are they using their assets efficiently to generate those profits?
That's where efficiency ratios come in. These ratios measure how efficiently a company is using its assets to generate revenue. One key efficiency ratio is the asset turnover ratio, which measures how efficiently a company is using its assets to generate sales. Shakti Pumps has an asset turnover ratio of 1.06. Which indicates that they are generating 1.06 in sales for every 1 rupee of assets.
Got it.
This ratio has slightly decreased from the previous year, which suggests that they may need to focus on improving their asset utilization.
So they might have some room for improvement in terms of efficiency.
Yeah, a little bit.
But what about their ability to meet their short-term obligations?
That's where liquidity ratios come in. Liquidity ratios measure a company's ability to meet its short-term obligations. One key liquidity ratio is the current ratio, which measures a company's ability to pay its current liabilities with its current assets. Shakti Pumps has a current ratio of 1.70, which is a healthy figure.
So they're in good shape when it comes to liquidity.
Yes, and another important liquidity ratio is the quick ratio, which is a more stringent measure of liquidity that excludes inventories from current assets.
Got it.
Shakti Pumps has a quick ratio of 0.84, which is a healthy figure.
Good.
And indicates that they have sufficient liquid assets to meet their short-term obligations, even if they were unable to sell their inventory quickly.
Okay, so they're good on liquidity.
Yeah.
Any other key ratios we should know about?
Let's talk about solvency ratios.
Okay.
These ratios measure a company's ability to meet its long-term debt obligations.
Okay, long-term.
Yeah. One key solvency ratio is the debt-to-equity ratio, which measures the proportion of a company's assets that are financed by debt.
Okay.
Shakti Pumps has a debt-to-equity ratio of 1.22, which is a reasonable figure, and indicates that they are not overly reliant on debt financing.
So they're using a healthy mix of debt and equity to finance their operations.
Exactly.
Okay, that's a relief.
Yeah.
But what about how well they're actually using that financing to generate returns for their investors?
That's where profitability ratios come back into play.
Okay.
One of the most important profitability ratios for investors is the return on equity, or ROE, which measures how efficiently a company is using its equity to generate profits.
Okay.
Shakti Pumps has an ROE of 36%.
Wow.
Which is an excellent figure.
That's impressive.
It is.
Yeah.
And indicates that they are generating a high return for their shareholders.
Okay, so overall,
Yeah.
Shakti Pumps' financial ratios suggest that they are a financially healthy and profitable company.
They are.
With a strong track record of generating returns.
That's right.
For their shareholders.
Uh-huh.
All right, so their financials are looking pretty solid.
They are.
But what about their plans for the future?
Okay.
How do they plan to use the funds they raise, and how is the company valued?
Let's dive into that. All right, so let's dive into their plans for using the funds they raise and how the company is valued.
Okay, sounds good.
The report outlines their capital allocation strategy, which really boils down to balancing growth with returns. And they plan to invest in a few key areas like expanding their manufacturing capacity, developing new products and technologies, and also entering new markets.
So they're looking to grow and innovate.
Exactly.
But how is Shakti Pumps valued in the market?
Right.
What makes them attractive to investors?
Well, the report highlights several factors, like their strong financial performance, their growth prospects, and also their commitment to sustainability.
Okay, so they're not just about profits?
No.
They're also thinking about the long term.
Absolutely, and they've consistently delivered strong returns for investors.
Okay.
And their focus on high-growth areas like solar energy really makes them an attractive bet for the future.
And their commitment to make in India probably helps too.
Oh, absolutely. That focus on domestic manufacturing definitely resonates with investors.
It aligns with government initiatives and national priorities.
It does.
Okay, so now let's unpack their shareholding pattern.
Okay.
Who owns Shakti Pumps?
All right, so the report provides a detailed breakdown of their shareholding pattern.
Okay.
The majority of shares are held by the promoters, the Patidar family, demonstrating their continued commitment to the company. And you also have institutional investors who typically hold large blocks of shares. And then the public who make up the rest of the shareholders.
So it's great to see they're transparent about who owns what.
Yes, transparency is key.
But what about those related party transactions we talked about earlier? What kind of dealings are we talking about?
Well, the report provides detailed information on any transactions that Shakti Pumps has had with entities related to their promoters or management team. These transactions are all closely scrutinized to ensure they're conducted fairly and at arm's length.
So it's about making sure those relationships don't lead to any conflicts of interest or any unfair advantages.
Yeah, transparency is key in maintaining trust with investors.
Absolutely.
All right, we've covered a lot of ground today.
Yeah, we have.
Let's recap some of the key takeaways from this deep dive into Shakti Pumps.
Okay, remind us what makes this company tick.
So Shakti Pumps is a leading player in the Indian pump industry with a strong focus on innovation, growth, and sustainability. They've built a solid track record of financial performance.
And they're strategically positioned to benefit from the increasing demand for pumps, particularly in the solar energy sector.
And their commitment to sustainability is commendable.
Yes. They did.
And they're not just talking the talk.
Right.
They're walking the walk.
They are.
Making real changes within their operations and beyond.
Absolutely.
They're a company with a clear vision for the future.
They are.
And this annual report really paints a very positive picture
It does.
of their potential.
It does.
Well, this deep dive has certainly been illuminating.
It has.
I feel like I have a much better understanding of Shakti Pumps now.
Good, I'm glad.
But remember, this is just a starting point.
Yes, absolutely.
If you're considering investing, you should always do your own thorough research.
Always.
A company is more than just numbers and reports.
Right.
You really got to dig deeper,
Yeah.
Understand their story, their values,
Absolutely.
your overall vision.
Yeah, it's about the big picture.
Yeah.
It's not just about the numbers.
And who knows, maybe this deep dive will inspire you
to
explore other companies and industries
That's right.
that pique your interest.
Absolutely. There's a whole world of fascinating businesses out there.
Yeah.
Each with its own unique story to tell.
Well, on that note,
Yeah.
we've reached the end of our deep dive into Shakti Pumps.
It's been a pleasure.
Until next time, keep exploring.
Yes.
Keep learning.
Keep learning.
And keep asking those important questions.
Absolutely.
All right. Thanks for joining us.
Thanks for having me.